G'day everyone, welcome back to Pete's Investing. Today is June 4th, 2023. This is the New Zealand Canadian dollar currency update. This is a request made by one of the MI viewers to do a update on this currency pair. So this is it for the moment. You can see here we've broken up into a neutral position from a bullish position recently in this during the weekly, and we're currently in a bearish momentum on the daily. I'll cover each of these, and this is the hourly chart. We'll cover each of these. So on the weekly, the triple moving average of the price chart and the moving averages of the CCI 150, we're in a bullish momentum but have broken down and currently neutral. So as I always say, making sure the weekly and the daily are aligned before taking trades on the hourly. So just be careful about going long or short. It's a bit undecided at the moment. With the daily, you can see there that's broken already into a bearish scenario. So probably best wait for the weekly to also break into a bearish before taking any short trades to be more confident. Of course, there's never a guarantee. But also on the daily, you'll notice here we've got a support level at 76.25 and a resistance up here at 88.18, and also these diagonal descending lines I've drawn. If I zoom out, you can see those highs and lows of those points in the price chart. So it's currently broken through that that descending line there and still falling. But you'll notice I've drawn this Fibonacci retracement between that low and that high. And you can see there the price is currently approaching the 61% Fibonacci retracement area. Now that's a key area to look out for, because generally if it breaks through that, it generally means a continuation of the trend to the downside, or possibly it could even bounce from there. And just give you, there's plenty of examples there. If you draw Fibonacci retracements, you'll see that many times. Going back on the weekly for a moment, I've done another Fibonacci here longer term during that low and that high back in 2009 to 2016. You can see there that price chart, the price chart bounced almost right off that 61% retracement level of the Fibonacci. So again, that's always a key area to look out for. If it broke through that, it usually means a continuation to the downside. Now, this is what we're looking at on the daily, this little area here, and that's where we are currently, between a 50 and a 61% on the daily chart, as I mentioned. On the hourly chart, there's not much more to add on this one apart from the trading strategy. And I've got up here a back test going short and using the same methodology on the moving averages of the price chart and the CCI 150, and using the fractal breakouts to go long or short. And this back test goes short. So you can see there are a couple of drawdowns on the profitability. With that average down, we don't use stop losses. So there's a bit of a drawdown during that period. Likewise, a drawdown during that long period there, and that would have had an effect on your profitability. And a way to avoid those areas, as I always say, make sure your weekly and your daily are aligned. Excuse me. So you can see here, back here, when it started going short during that peak, when it dropped in the bottom of that point there, you can see there that was the start of that primarily a bullish trend on the daily. And again, that in October 22, that was during that period when it was only long trades during that period as well. So again, go trades only in direction of the weekly and the trading and the daily to be more confident in your trading strategy. So to understand that and other trading ideas, reference the links in the description below. Subscribe to my Patreon page, where we also do weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.